Hey guys, Eric here, Mr. Fired Up Wealth. Excited to bring you video number 2 in a series of 3 total videos covering the top 10 disruptive technology, top 10 disruptive growth stocks that I'm buying and holding long in my portfolio. You don't want to miss this series. Stay tuned. All right, guys, let's kick off video number 2 in the series of 3 covering the top 10 disruptive growth stocks. And these are stocks that I'm basically holding in my portfolio that I'm holding long. And if you watched the first video, I'd recommend, if you haven't seen the first video, to go take a look at that. But the goal of this series is to try to cover the top 10 stocks and cover all the different secular growth trends. So if you followed the channel for a while, we're talking about cloud, we're talking about fintech, we're talking about autonomous driving, 5G, those kind of secular growth trends. So I'm trying to give you a kind of a best of breed stock from each of those categories. And today we're going to start off with number 4. And none of these are really in order. It's just 10 picks to explore. But the fourth one that we're going to cover is going to be Zillow Group. Now, if you're not familiar with Zillow Group, it is very, very disruptive. It's the epitome of a growth stock, a disruptive growth stock. I used Zillow to sell my old house back in Minneapolis and actually used Zillow to help buy the house that I'm sitting in now. And I can tell you the experience was great. This estimate they provided for it on both houses were very accurate. So when we got the appraisal, it was within a couple of % of what the estimate told us it was going to be. They've improved their algorithm and their machine learning greatly. And I'm going to get to that in a minute, so stay tuned. Now, this is from GeekWire. It says Zillow stock spikes after crushing Q2 expectations. CEO says that people's desire for home is resilient. I'd say, people have been stuck inside. They want something different. They want a house with a pool. They want a different environment. So as you know, the housing market's been strong, not only because of the pandemic and people, wanting a nicer place to hang out in all the time, but also because interest rates are really low. And as long as interest rates are low, I think you're going to see that trend continue. If you haven't seen like the Rocket Mortgage IPO video, it's the same kind of story as that. So this is a technology stock that has, machine learning and AI, and it's very disruptive in terms of what it's doing in the real estate market. So they had a great quarter. They just reported here a couple of weeks ago. And this is Rich Barton, the CEO. He says, the real value of home has never been clearer. We're grateful to post record Q2 results today, but the bigger story is the tectonic shift in real estate. People are moving and came to Zillow in huge numbers. Once in a generation tailwinds in real estate and tech are converging with Zillow at the nexus. I think that's a very powerful tweet, and I think it paints the picture really well of what I'm trying to demonstrate for you today. And this is the presentation slide from May 2020. And I really can appreciate when the investor relations pages have these quality decks, because it means a lot in terms of the branding and marketing of the company. You can tell the difference of a company that doesn't have these high quality decks and ones that do have them. So these guys are a tech company and they show it in every way. They're good at their branding, their name recognition, all those different things. Their mission, it says, our mission, give people the power to unlock life's next chapter. And you think about consumers, it's more and more the trend that you want things at your fingertips with an app. You want it, easy chatbots, automation, things like that. So today's consumers expect push button, magic happens exchanges. On the far left, you got low cost, high frequency. So you got Netflix, Uber, Lyft, Grubhub, Amazon. Mid-cost, regular frequency, you got things like Expedia, Airbnb, maybe not as much right now, but I think they'll come back. High cost, low frequency, like Carvana. That's one that I probably should have bought a while ago. It's performed well. And now the largest purchase most people ever make, a lot of times it's probably a home, so real estate. Expectations have moved up the value chain. So this is saying from these low cost, high frequency items that they want, kind of on demand through apps, all the way to cars and now houses. But it's complicated, time consuming, stressful, and expensive for the customer. So they're talking about the historical real estate market. And I was in real estate for a number of years, had a good career. It actually shifted gears, went back to school to get a master's degree, but sold houses for a while when I was younger out of college. And I can tell you that this is very true. Now, I do want to make this point because I think it's important. There are a lot of good real estate agents, a lot of good realtors out there. It's no different than, say, a financial advisor. There's some really good ones. There's some really bad ones. So, if you're a real estate agent, you can still work with a company like Zillow to advertise your brand on their platform. And a lot of agents are doing that. I'm going to get to it in a minute with some of the things that Zillow is doing, but they're going as far as actually buying and renting homes now, which is completely changing the game. They're kind of a one-stop shop for real estate. The current situation, though, you've got real estate agent, inspector, mortgage lender, appraiser, title company. They're trying to make all this kind of a one-stop shop, plug and play. The customer journey is often non-linear, requiring multiple vendors with no central navigator. They want to be that central navigator on the internet, on an app, etc. Their solution for it, they call it Zillow 2.0, and it's to create a radically simpler real estate transaction through technology, service, and integration. I think that's powerful. We are the leader in online real estate today, and some really good numbers here. So they have a substantial data advantage because they have 15 years of Zestimate data, a large audience and engagement, leading brand awareness and trust. Most people know the name. Industry partnerships, 15 years of experience, like I mentioned, best-in-class tech and real estate operators. And that's why, Redfin is a competitor, and they're good too. I think Zillow is best in class when you look at, their machine learning and their algorithms. They've got some really good programmers that actually work there. So I do like the long-term outlook for the company. They have 197 million monthly unique users. That's a lot. Visits in 2019, 8 billion, and over 50% unaided brand awareness in the United States, meaning that most people just know the name. The word Zillow is more searched than real estate in Google. So more people type in Zillow than they do real estate when they're doing a Google search. So it's kind of like Kleenex, you call a tissue a Kleenex, kind of same thing. And they're uniquely positioned to address customer needs. So they're number one in unique users, number one in brand awareness. They have a leading technology platform and a very large data set. So you can search for homes. And this is, if you haven't used the app, I encourage you to check it out. It's really cool. So you can put this exact boundary of where you want to look, and it pops up all these little dots, and you can click on it and get a picture and a price, and then you can drill into it and get more data. But you can rent, buy, finance, and sell. You can do it all through this one app, this one platform, which I think is really powerful. Our national presence and scale create powerful synergies and network effects. So on the left, Zillow 1.0, that's search, find, connect. Real basic, real simple. It worked well, but they're taking it to the next level. And now they're talking about shop, rent, buy, finance, adjacent services as well. Everything in here, selling, everything from buying to selling, renting, everything in between. And that's really disruptive because they used to just search, find, and connect and help people connect to agents, whatever. Now they're actually doing the buying and selling, which is a threat to some real estate agents. As I mentioned earlier, there are really good agents out there, and there's always going to be. Thank you, Kim Sato. Patreon. Hey, if you haven't checked out Patreon, we've got Patreon on Fired Up Wealth. It's great. We got a Discord channel. It's private. There's different membership tiers. Go check out Patreon. We're having a lot of fun on there. That's what just popped up. Somebody just signed up for Patreon. Zillow 2.0 will radically simplify the transaction, aims to save customers substantial time, money, and stress, and can accelerate the frequency of real estate transactions. So from current home to new home. I could probably spend an hour just talking about Zillow. There's just a lot of good information. In the process, we're opening up a large new market opportunity. This is important. So they're saying that there's a $1.9 trillion home transaction market opportunity. Now, obviously, interest rates are low, which is going to make a difference. But the nice thing about ZG Zillow Group is they are positioned well, not only in a strong economy, but also in a weaker economy. And what I mean by that is they can buy and sell a house for sometimes less money than a full service brokerage. So, say your full service brokerage might charge you 6%. They might be able to do it for 4%. When the market's tanked and everybody, people are trying to sell their house, they might be upside down. They might be underwater in their mortgage. Every dollar is going to add up. So they might be even more likely to use a service like this that costs less than when the economy's booming and the real estate market's booming, because they might not care about, a couple percent, and when the market's hot and they're selling it for way more than they bought it for, if that makes sense. So I think it's one of those companies that can do well both in the short term and long term. I think they're positioned well to achieve success whether it's, a good economy or a bad economy. That's my opinion on it. Impact of COVID, we believe in the resilience of real estate and need for technology innovation, of course. So powerful insights and strong leadership equip us to navigate current economic environment. This is really important. I won't go into too much detail, but I mentioned earlier, they have 15 years of Zestimate data, and they have some pretty impressive machine learning. So informs pricing in real time and future transactions. So like if your neighbor sells a house across the street, it's pulling that public information and it's going to update the value of your home, almost automatically as soon as it's on public record. So it's constantly taking that data and putting it into the algorithm so that you can have a good idea of what your home is worth, as estimates, things like that. So this is interesting. It says more Zillow 3D tours, April versus February, 525%. That's how much it was up. And 40% more visitors. People are stuck at home. They're like, hey, let's check out this 3D. It could be that they're actually looking to buy a home, or they could just be daydreaming and saying, well, what's this mansion look like? They got extra time on their hands, whatever. But, better partners, more transactions, more digital shopping, better connections. Our path forward. Scaling the business with discipline and raising opportunistic capital. Now, this is really good stuff. Talks about some growth items. I want to go to, this is good too. You can see the growth here kind of shifting upwards, of course, basis points, year-over-year margin expansion. You've got a nice uptrend. More stats and graphs. You can take this. I'll put a link to this PDF or this presentation in the description. You can go take a look. I want to cover the leadership team really quick. So leadership team has built successful consumer internet and real estate companies and managed across economic cycles. So look at this. So Rich Barton, we talked about him earlier. He's the one that did the tweet at the beginning of this video. He's the CEO, and he's actually worked with Expedia, with Glassdoor, with Microsoft, with Netflix. You've got executive chairman here. He's worked with Microsoft and Grubhub. You got Amazon, Microsoft, Invitation Homes, Starwood. I mean, on and on and on. Expedia, Lending Tree, Starbucks. So you're basically taking this leadership team that has experience in technology and in hospitality and real estate, and you're making this really strong group that knows exactly what to go after in the marketplace. So here's some of the highlights. Significant brand and data advantage, large engaged audience, lower customer acquisition costs, strong business with expanding margins, driving expansion to Zillow 2.0 that we talked about earlier. Homes and adjacent businesses rapidly scaling to capture massive TAM, or total addressable market opportunities. And best-in-class tech and real estate operators creating seamless transaction. I do believe that these guys are best in class. Experienced team with long history of shareholder value creation. We just went through their backgrounds, very impressive. Strong balance sheet, predictive capabilities, enable managing across the business cycle, and well-positioned to lead faster into the future of real estate 2.0. And you can take a look at all the financials, but they're trending upwards. Margins are improving. The growth is good. I think that this is one of those stocks that is a disruptive, growth stock that you hold on for 5-10 years, and you'll probably be sitting pretty well. So I've got this one. You should take a look at it. I wanted to point out one last thing before I move on to the next pick. So there's Class A shares, which are ZG, the ticker. And then there's Class C shares, which are just Z as the ticker. Now, if you follow ARK investment ETFs, they generally buy and sell Z, which is Class C. I prefer and I own ZG, which is just the A shares. It's just about voting rights. Unless you're buying millions of dollars worth of stock, it doesn't really matter that much. So it's up to you. I prefer the ZG, I don't know why, I just do. Quick look at it. They have a negative net profit margin, but the year-over-year growth was 28%. The net cash on hand is quite a bit higher. Cost of revenue, things like that. So you can take a look at the financials. So, I'd like to see this number even better in the next couple of quarters, and I think that's probably going to happen. The stock has made a huge run. It's trading right now at $82.22, up 3% today. If you look at a max chart, this thing started trading back in 2012 for $3.80. So congratulations if you bought it for $3.80 and that you're still holding it today. It was $3.81. Looks like you could have got it for, you could have got it for $2.96, August 12th, 2011. And it was all the way up here in 2018 to 62, kind of dropped down. It was back February, it was the high of 65. It crashed. I started buying it down here in the 40s. It crashed to $26.49. And I remember, if you go to Fired Up Wealth Facebook group, if you're not a member in that, go check it out. Go into the Facebook group and just do a search for ZG. Just do a search for ZG, and you'll find a post on there. I was saying probably in this $40 range that you should buy Zillow Group because their growth is really, really good. They're kind of a beast company, and that they're going to do well in this pandemic. And it was spot on. It went from $40 to $82. If you watch the how to build a growth portfolio video that I did on April 4th, 2020, I've got the top growth stocks in there. This one was on that list. Pretty much all the stocks on that list that are, disruptive technology stocks have all gone up 100, 200%. So it's been a good run. So take a look at this one. You can buy either the Z or the ZG. It just depends on if you want Class A or Class C. Obviously, it's very expensive here at all-time highs. I always dollar cost average. I'm not buying it here because I already have a full position in my portfolio that's up over 100%. But I do think it's one of the top 10 disruptive growth stocks to hold for, the next 5-10 years. And it does cover, we're looking for the top 10 stocks that cover different secular growth trends. This covers real estate. So it's a very important one, I think, to kind of have some diversity in that top 10. It's about an $18.6 billion market cap. Does it have room to go up? Of course it does. Could it, fall down and lose, 20, 30% of its value? Absolutely. So be careful with this one, but I do like it long-term. And it's something I think that over time will perform well. Okay, so next is a company that has so much awesome stuff going on that the investor presentation is like 70 pages long. So literally, you could do a 2-hour video on NVIDIA. I'm going to go through this as fast as I can and show you some of the highlights of this. But this is definitely a top disruptive technology stock. I've had it since... No, Siri, I don't want to talk to you right now. Go away. I've had it since about, 135, under 150 somewhere. So I'm up pretty big on it. The CEO is Jensen Huang, and he's the CEO and founder of NVIDIA. Brilliant guy. His quote here: NVIDIA specializes in accelerating computing, solving important challenges beyond the reach of normal computers. We innovate at the intersections of computing graphics, high performance computing, and AI, artificial intelligence. At our core, we are a real-time simulation company simulating worlds, physics, and intelligence. Okay, sign me up. Where do I buy your stock? Thanks. Seriously, if you're not already in this one, you're probably a new investor. This thing has been kind of a no-brainer for a while, and it was really inexpensive last year when they had a couple bad quarters, and I was buying it pretty heavily. Have it in my daughter's UTMA account, so they're doing really well. Kicking down barriers, NVIDIA has awoken the industry to ray tracing. Nutshell, these guys are in gaming, artificial intelligence, autonomous driving. A big push right now is data centers. AMD is also in that category. You could easily throw AMD on this list. NVIDIA, I like it because it's covering so many different secular growth trends under one company. It pays a nice little dividend, albeit not a very, very high dividend. It pays a dividend. It's technically a DGIF stock with a very small yield. So I like this stock because it's like a hybrid stock of awesomeness that does all different things for my portfolio. The next frontier for real-time collaboration for 3D content creation. This is an impressive, very, very, both Zillow too is impressive, but both of these investor relations PDFs are just impressive. And that's important to me. I think, as an investor, if you're a tech company, I don't want you to have some garbage deck that doesn't have any cool graphics on it or anything like that. So NVIDIA is inventing the future of machine learning right in front of our eyes. And so you talk about artificial intelligence interface for hyperscale. Trained AI applications are deployed in large scale, highly complex cloud data centers that serve voice, video, image, and recommendation services to billions of users. To be useful in our daily lives, they must work incredibly fast, a demand that is increasing exponentially with the rise of conversational AI. NVIDIA Tensor RT software and NVIDIA GPUs converge to optimize, validate, and accelerate the world's most demanding neural networks. Yeah, just take my money. The smart everything revolution is NVIDIA at its best. Talking about state-of-the-art cloud-native platform enables AI production for Internet of Things, 5G-based services. Internet of Things, artificial intelligence, 5G, autonomous driving, data centers, cloud. These guys cover it all. Metropolis, Drive, Isaac, Ariel. They have so much stuff going on, it's hard to even keep track. And one thing I've said before, I've done some videos on NVIDIA. I've talked a lot about NVIDIA on the channel. They have some of the best talent in the industry. They're located in the Bay Area, San Francisco. And if you talk to anybody that works there, they love it there. It has a really awesome office, has actually like, there's grass and stuff. They invented a way where they can grow plants and grass like on the walls and stuff, but it's just a really good workplace. People like working there. The tenure is one of the longest of any companies. People just don't leave because they love working for NVIDIA. So I thought this was interesting. Several 100,000 gamers amassed 2.4 exaflops supercomputer. 2.4 exaflops supercomputer. I mean, you don't even use exaflop in conversation very often, right? That is, look at this number right here. That's a big number. That's a lot of zeros. Operations per second, 8 times the compute power of Summit, the most powerful supercomputer in the world, and more than the world's top 500 supercomputers combined. All right. Growth trajectory of the fourth quarter tells the story. So revenue 41%, gross margins up big, earnings per share up big. These guys are going the right way. Reinventing graphics. They had the biggest upgrade in history in their GPU recently. Pioneered accelerated computing, AI for interface. I mean, take a look at this on your own. There's just a lot of good stuff going on. Mellanox data center technologies are central to our cloud platform. In 2009, we announced the purchase of Mellanox Technologies, the world's leading provider of networking technologies for high-performance data centers. This is a big reason I'm so bullish on it. Still, our companies are long-term partners, having built together many of the world's supercomputers and NVIDIA AI systems. Mellanox has fantastic people and culture and a long history of innovation based in Israel. It'll be one of our most significant design centers. We have received approval from all necessary regulatory agencies and expect to close about April 27th, 2020. So obviously that is completed now. So this presentation is a little bit old, but so this is April 27th. NVIDIA completes acquisition of Mellanox, creating major force driving next-gen data centers. And this is part of the reason why the stock has been on an absolute tear. So this is all completed now. NVIDIA, now we got autonomous vehicles and robotics. Like, how many secular growth trends can you be involved with one company? I'd say NVIDIA is one of the only ones I can think of. Is probably the only one I can think of that covers so many different areas. And they do them all well. It's not like they're a jack of all trades and they do things kind of, half-heartedly. Everything they do is very, very high quality and best of breed. So, this is a really good, if you want to read this is really good. There's a 10K in here and you can go through all this information. I'm not going to bore you to death. But NVIDIA, I'm long NVIDIA. I've been long for a while. It's one of my largest holdings in my portfolio, my taxable portfolio. If you haven't seen the portfolio, I've got a video on it. It shows you all my different holdings. It has changed quite a bit since that video, but I believe NVIDIA is still the 4th largest position in my account. So I'm long on it. I like it. It's expensive here. It's made a huge run, but a lot of people have price targets on it that are much higher. And it probably is one that continues to go higher based on all these secular growth trends that it has in front of it. All right, guys. So the final pick on today's video is one that I traded quite a few times. It's IPO 2019, and I made some good profits on it. But I personally own Apple TV. I own Amazon Fire Stick. I own, Google Chrome that's built into Sony TVs. I've got, 11 different TVs in the house and just everything you can basically imagine. I've got a Roku in the garage in my weight room, and I don't really like my Roku, but it's one of those things where everybody I talk to, they love their Roku. And they love TVs that have it built in. So if you've got a kid and you're like, well, I'm just going to buy this cheaper TV that has Roku built in. If you're buying like Sony TVs, they don't have a Roku built in. It's a whole different thing. That's run on Android. I've got an LG that has, basically Amazon, everything pre-built in there. There is no Roku. So it depends. But there's different brands. The thing that's risky about Roku is that if they lose their TV licensing rights, you think of, they've got Amazon and they've got Apple and Google and all these big dogs that basically could come after them, anytime. And I feel like they could just bury Roku. So I've been fighting against the grain forever on it. It's kind of like Tesla. forever I was like, not bullish on Tesla long, not bullish on Tesla long. And everybody I know, I mean, even like tech friends that love it. They love how easy it is to use, how it's built in the TV, or if it's an external, external unit. The problem I have with it, okay, so every new TV you buy basically has something built into it. So they have licenses with certain vendors like TCL and others that they have the Roku built into it. I think there's only so much market share for existing TVs that aren't smart TVs. So you think of like an older TV that's not a smart TV and buying an external Roku for $30 or whatever and plug it in. I think Roku has a large enough subscription base where they can actually add some additional services, maybe get some recurring revenue. So this is one of my riskier picks for disruptive growth, almost to the point where I would probably put it in a spec basket. But I'm telling you that it's one of those stocks that has a cult following. It's one of those companies that has a cult following. And to me, it just doesn't seem like the trend's going to stop. If you watch Phaser, Phaser is the Roku is the R in Phaser, Phazer. If you watch that video, and they had a good quarter, and they keep doing good things. So Roku is on my list because I need somebody for streaming, and these guys basically are kind of a best of breed, streaming, and they're inexpensive and they're easy to basically get to the masses. So you think of international and things like that, where low cost point. Different countries and things like that, and you're trying to get to newer audiences that don't have a ton of money to spend on these services. I think that Roku is a good play. It's a little bit of a spec gamble to me, but I think it deserves a place on the 10 stocks that we're going to cover because it's covering one of those secular growth trends, which is streaming. Everything's going to streaming. Everything's going to subscription services. So I'm not going to do like a full 10-minute breakdown of Roku and go through the website, everything. Everybody knows what they do already. So in Q2, so this is from August 5th, Q2 Roku delivered strong results highlighted by exceptional account growth. Here are the highlights. I'm going to cover this really quick. Total net revenue grew 42% year over year to $356 million. The platform revenue increased 46% year over year to $244 million. Gross profit was 29% year over year to $146.8 million. Roku added 3.2 million, this is important, incremental active accounts in Q2 2020, and that was 43 million accounts. So that's pretty significant. Streaming hours increased by 2.3 billion hours over the last quarter to 14.6 billion. Average revenue per user, that's called ARPU, of $24.92 on a trailing 12-month basis, is up 18% year over year. And the Roku channel reached US households with an estimated 43 million people. So they're trying to expand into that whole recurring, subscription type model, do other services. They got the Roku channel, things like that. I said I wasn't going to go to the website, but here's the website really quick. So I said $30, it's spot on. You can get a Roku player for $29. You can buy, these TVs that have integrated, and they also are starting to do premium sound. So they're doing soundboards and subwoofers and things like that, more of the smart home stuff. So, I think it's one of those things where they might not be the best of, I consider like Apple TV 4K. I think it's the best of breed, but not everybody wants to pay that price point. It's $200 or $300 versus $30. So for $30, it's a pretty darn good deal. And I think it's one of those things where there's so much demand. There's so many people that need streaming services that it just makes sense that Roku has room to grow. There's room for a lot of different players and price points. And I think Roku can continue to capitalize on a certain market segment. And so that's why I'm long Roku. I actually don't own the stock. It's in several of the ETFs I own, but I do not have the individual stock. It's made a run like a lot of different things. Like I said, I traded it quite a few times in 2019, but if you look at this, I was buying and selling in this range, and it's gone up quite a bit. Now this was $160 in November of 2019, and it's climbed back from $76 and doubled, over to $149. It's an $18.6 billion market cap. And if you look at the quick and dirty kind of financials, assuming this is right, obviously I'm never going to go off of just this and go buy the stock. But this is saying 42% year-over-year growth and a negative 12% profit margin. So if you're following rule of 40, which it's not really SaaS, but if you're just doing it for fun, you're at a 30, which is pretty good. And I think that, this is a company that if they can continue to figure out ways to make money, increase subscription revenues, I think it's one that's going to do well. So take a look at it. Its ticker, of course, is Roku, ROKU. it's one that I would include in the top 10 for disruptive growth stocks. All right, guys, so there you have it. So we have Zillow Group, we have NVDA, we have Roku. If you haven't watched the first video for the first 3 picks, go check that video out right now. I'll be coming out with a third video that will have 4 picks, and I even have a bonus pick on that one. So there'll be 5 total stock picks on the next video. If you haven't subscribed, please do. That way when the new video comes out or any video that I release comes out, you'll get a notification. You go ahead and click the bottom right-hand corner, click the subscribe button. Then there's a little bell. Click that bell and you'll get the notifications whenever I release new content. You can also check out Patreon. We do have some subscription type paid services there for additional content, including even following what my stock picks are, what I'm buying and selling on a daily basis. And I even have some private mentorship programs available for you. It is a limited Patreon membership sign up. So, if you're interested, go check it out while there's still some seats left. I plan on growing that quite a bit. Early retirement is around the corner and lots of great things to come for Patreon. We also have a Facebook group, which of course is free. You can check out the Facebook group and just apply for a membership there. You just got to answer a few questions. But I appreciate you watching this video. I appreciate your time and attention. Have a great rest of your day. Take care.